Hey everybody, one stock I've been asked about over and over and over again lately is Opendoor. We're going to dive into this stock, why it's on everybody's radar, why the big move in the stock, and what could be coming next. Before we do, please check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So Opendoor stock has been kind of on a tear lately. I'm going to share a chart real quick. Since the end of July, Opendoor is up by 1,330%. It was about 70 cents a share when at the start of this chart, which was not that long ago. This is a 3-month chart of Opendoor, and you could just see it. And it hasn't just been one spike; it's kind of been spike after spike after spike after spike, and that's where we are now. Now it's $8 and some change per share. It's been a remarkably strong mover, and the reason is that a hedge fund manager named Eric Jackson predicted very loudly on the X platform that the company could be a 100-bagger in a few years. People took him seriously because Eric Jackson was the notable hedge fund manager who called the 100X move correctly in Carvana a few years ago. Carvana was on the brink of bankruptcy, was trading for a couple dollars a share, and it's essentially 100X from the lows. And his thesis has to do in this case with Opendoor's data, not necessarily the core business of buying, selling homes, but Opendoor has completed over 200,000 real estate transactions, and as a result has some data that no one else has, pretty much because of the nature of its transactions. It doesn't just buy and sell homes. It buys homes, holds them on its balance sheet for a little bit, pays interest, does some repairs, sells them to buyers, and et cetera, et cetera. So one example of data that Opendoor has that no one else really does is great real world figures for the specific effects of repairs on sale prices in certain markets. And so Jackson believes that with the right AI partner, say like an OpenAI or something like that, Opendoor could create the best home pricing engine ever built. Essentially something that would be miles above where Zillow's Zestimate is right now. And that could be licensed as a software as a service product to other companies who could use real estate pricing tools, and that alone could be worth $5 to $10 billion in market cap all by itself. For context, even after the move, Opendoor is worth about $6 billion. So if people believe Jackson's thesis, it's not surprised it's been bid up to this level already. And it's not just the AI stuff. He also does believe that the core iBuying business is in a much better position to succeed now. Since Opendoor went public in the original SPAC boom in 2020, 2021, all of the major competitors, specifically Zillow and Redfin, have exited the iBuying market. The company's taking a much more disciplined asset-light approach. So he thinks that this is truly the future of how we're going to buy and sell homes, and that Opendoor now has the potential to totally dominate this market. And the company's new CEO appears to share Jackson's vision, unlike former CEO Carrie Wheeler. So the fact that the CEO seems to be on board with all this is definitely helping the stock move up. That was one of the spikes we saw in the chart a minute ago. But if I run through the numbers, $1.6 billion of revenue in the second quarter, you can see that the amount of homes they sold was much higher than the number they bought. They're definitely reducing their balance sheet. These were both above their guidance range. Not a terribly profitable business right now. From that 1.6 billion in revenue, 128 million in gross profit. You can see on a GAAP basis they're losing money, but on an adjusted EBITDA basis they are slightly profitable. Not by much though. That's like a 1.5% adjusted EBITDA margin. I am staying on the sidelines, not just because I missed the move. I was thinking about buying Opendoor, if I'm being totally honest, when it was $1 or $2. Kind of wish I hadn't just rode this move up. But from a long-term perspective, Opendoor is a business that's very sensitive to the real estate market. If we get lower mortgage rates over the next couple of years, it could be a big catalyst. If the real estate market remains slow or slows down even further, it could be a big negative catalyst and make profits go away really quick. Opendoor was not that far from kind of almost throwing in the towel and executing a reverse split to just kind of stay viable not that long ago. So there's a lot of real kind of questions about the future viability of the iBuying business. Even if Jackson's data and AI plan is executed successfully, I question that it would be worth $5 to $10 billion. And it's going to be tough to get the iBuying business itself to where it justifies even the current $6 billion market cap, let alone the $60 billion market cap that Eric Jackson is calling for. Now, I may be wrong. This one, just the risk reward dynamics don't make sense. So I'm staying away. I'd love to know what you think. Do you own Opendoor? Are you buying shares? Do you think I'm missing something? I'd love to hear your comments. I'll do my best to respond to any of them individually. And thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.